Yo, what's going on, believers? It's your boy Rebalance. Another live price example. I did already just kind of show the economic calendar, right? What everything is kind of stalling for, in my opinion. Got the Fed Chair Powell going to be interviewed here in about 10 minutes. What's hilarious to me is usually before the guy even gets to say hello, the markets will start to act very wild. And sometimes I've seen some crazy, expansions happen, within minutes, right? So that's why I'm just providing a live recording today. This is not financial advice, right? I'm not a licensed financial advisor, investment expert. Don't claim to be any of those things. Please do your own research. There's risk involved with trading live funds. None of that's out the way. What I'm showing here, just so you can get a visual of the levels that I'm watching for this high impact news that's about to hit the marketplace here. So on the dollar chart, to be completely honest, I've been anticipating lower prices since we were down in this area. I was thinking it would trade below this sell side liquidity before running higher, and I wanted that to be kind of a catalyst for the indices to trade lower. But what you can see is, and I'll pull up this chart here, and I'll go to the daily. This is just all four of the U.S. stock indices, right? The only one that's been relatively weak is Dow Jones. Well, then you could say the Russell has also just been weak for a while now, right? Nasdaq was bullish, running to those levels that I had called out for it and above, and then SPX was consolidating, but it's following Nasdaq at this point, running higher. And I'm looking into these highs over here, how it responds to those in particular, right? And this is when I do plan on, if I do engage today, I will be trading the E-mini S&P. Not interested in trading Nasdaq or Dow Jones because of the fact that they've been moving opposite of each other. I don't like when they're not in symmetry, so it just makes it less high. It makes the chances of it being a high probability setup lower, in my opinion. So I'll stick to the one which is usually cleaner, which is the E-mini S&P. But what I would like to see today, just to kind of put it out there before it happens, is for a spike up in the indices. Like I said, there's still a little bit more area of opportunity above the current prices where they could trade to. Speaking about SPX and Nasdaq in particular, I don't expect Dow Jones to run up right to any of these highs, possibly these highs, but not here. If it gets up there, then I'm wrong. I'd say it, right? I'm wrong. But yeah, what I'd like to see is a spike higher, and then if it doesn't, right, offer a nice drop off today, which I'm kind of not expecting. They've moved this interview with Powell back an hour already. Today is the last day of the trading week, right? So the market's gonna close up at 4 p.m. Central Standard Time. It's already about to be 10, right? So they only give 6 hours left of market activity. And so far for the week, just looking at it right from a weekly perspective, we've had some pretty good expansions on Nasdaq, S&P, and even the Russell. Not so much on Dow Jones, right? But also just looking at the dollar on the weekly, right? We've also had a pretty nice expansion on the dollar already on the weekly. So I'm not really honestly expecting too much today. What would make the most sense to me would be if there were seek and destroy conditions brought into the marketplace. So lots of volatility, right? A rather exciting week already across the board where we've seen, expansions higher everywhere, a lot of, potential areas to reverse, and both assets that didn't reverse, they just ended up keep going, right? And so what's happening is there's a lot of traders that are interested in, catching a reversal, in my opinion. But the hard part, that I'm seeing right now is the fact that they've all been moving in sync. And so I was saying that I don't expect them to move in sync today, meaning that dollar higher would mean lower indices, right? Rather than dollar higher and higher indices, and then vice versa, right? Dollar lower would mean higher indices, not lower dollar and lower indices, right? And so that's kind of like what I'm expecting today. But if they are in sync at all, I would anticipate it being a seek and destroy type of being in sync. Because real quick, just looking back through each individual day, I don't really see any seek and destroy days except for, well, on the dollar Wednesday, you could, kind of categorize this as seek and destroy, right? Looking at S&P, could say Tuesday and Wednesday, you could say, well, Monday and Tuesday, I mean, you could say those were seek and destroy. Um, NASDAQ, I wouldn't really say any seek and destroy days because we had just had a drop, found support, rally, consolidated, right? Drop, rally. So yeah, I wouldn't really say any seek and destroy days on NASDAQ. Dow Jones, I guess kinda Monday. Tuesday was nice and bearish. Wednesday was nice and bullish. Okay, so Dow Jones Monday and Thursday seek and destroy days. So we actually have had a couple seek and destroy days. So I mean, obviously, it wouldn't surprise me if another seek and destroy day was to be, on the agenda today, just because of those things that I just stated, as far as the excitement, right, that there exists with traders trying to jump in and catch the top of this reversal on the indices, right? Like I got myself into trouble at the end of 2021 trying to do that exact thing, trying to catch the top, which I was right, technically, right? If you look up here, this was January 2023, so across the board in January 2022, right? So across the board, well, this isn't going all the way that far back, but just using S&P for an example, right? You can see all of the indices around the end of 2021, beginning of 2022, saw a nice drop off, enter what we could consider a bear market, and they have not since right revisited those highs. And so while I was right about a drop coming there and it was a massive drop across the board, I was wrong about timing and I wasn't managing my risk appropriately. So I ended up hurting myself and losing all the money I had in all of my accounts, right? And again, like I said, the only guarantee that I'll ever make to anybody when it comes to this business is that I guarantee that you will lose money. It's just about, how that affects your emotions, right? How you're able to manage those losses and learn from your mistakes. In my opinion, that it will, determine whether there's long-term success in this business for you or not. But I'm going to just have this first part of the video pretty much right where you're hearing me speak live over the chart. But for the next part, which is once the storm comes in about 3.5 minutes now, mic will be muted, and now those parts of the video are going to be sped up. Okay. This is not a part where I'm speaking with the benefit of hindsight, just adding my voice over what was already recorded. I've annotated using a text tool most of the important, well, all of the important things that I was thinking at the time. And again, from the benefit of hindsight, there wasn't much to really take advantage of or to even really learn today, except for the fact that for this week already, we've had what I described already was a large expansion on the weekly chart, and a lot of higher time frame levels were reached. So even with Powell speaking, and it wasn't the typical type of like press conference or anything like that that I've seen where the markets get really busy. It was just kind of like a quick discussion and also a remembrance of a guy who worked a long career in the financial industry. But the main point was there wasn't any like obvious levels of buy side or sell side to set me up for my New York session model. And so that's why at the top there you see the buy side for today is not how I typically have it labeled. And that's just because that's actually a daily level up there rather than, a pool of buy side liquidity from the 15 minute like I usually have. And then for the sell side, as you can see, below that orange line, well, above that orange line, those lows were basically the sell side. And so once it traded into that, you see I annotated sell side engaged, and there's that pending, right, 15-minute inefficiency there. And so I'm just kind of stalking price to see if it will leave that area open, right? And so that would be an area of for sure interest on the lower time frames, right? If it's to be left open and price then is able to reprice to it at a later time, I would of course be, looking at the dollar for confluence and possibly the other indices just to see if it would make sense to, take a trade there for the reversal back lower, or if I want to maybe wait to see if that area gets violated and then, price finds support right above it, and then to take that up to the buy side, which is that old daily high, right? And so these are the things that were pretty much I was weighing for this morning. If you look over to the left, you see a lot of black candles, right? And if you've watched, any of my videos, you know that I love looking for inefficiencies, right? Now there's a bunch in that run higher that you don't see me take any sort of, time to annotate because that brown, shaded area lower, that's that daily inefficiency, right? That we've kind of been bouncing around for a while now. And also just understanding that that price run, that rally, right, yesterday afternoon, in my opinion, if it's to run down to that low, which is their sell side rushing below there, but if it runs down to that low, then I'm thinking today's going to be a large range day potentially, or a large seek and destroy, meaning I would expect it to get to that low, violate it, and then keep going lower, or just trade below it and then reject quickly, right? And then run back higher fast above the yellow shaded area and into that daily buy side, right? So those would have been the two scenarios I would have been anticipating. If price, is to trade down to that low, what two things I would, basically looking for. And so at this point, I'm, just typing up, right? The interview is about to end soon, measuring that range of the rally yesterday, just looking at how the bodies of these candles respected that midpoint. I'm not really looking at that as a valid reason to get in for a buy, right? So I'm just taking note of that just to show you all. Like I said, price tends to consolidate around equilibriums. So again, given the benefit of hindsight, currently, you're seeing the 15-minute chart. It's only about less than 30 minutes from, you know, this particular time that I'm doing this voiceover. And so price is still in that range right now, right? So basically consolidating at that equilibrium. And so there was that other 15-minute inefficiency, a larger one, where you see I put those green lines to annotate that. And just for the sake of, I've taken a trade every single, recording so far this week. Monday, I know was a win. Tuesday was a win. Wednesday was a loss. I missed the one that would have been a win, the sell that would have been a win on the 3-minute chart. And I took the 15-minute trade like as a retest. That was a loss. Thursday, yesterday was a win. And then today, so I decided to get into this. So far the record is 3-1, and pending whether price wants to continue right back into that brown shaded box, or if it wants to run higher into the buy side, that will determine the end result of the week. But the beauty of it is that it's not about not losing. Like I said, only guarantee is that you are going to lose money. It's about how you manage all of those things. But thanks for watching. I'll catch y'all on the next one. Peace.